My name's Allan Robertson. I'm a retired management consultant with over 30 years experience consulting in a number of areas, including the tourism sector. I'm comfortable with the sector. I know what it means to have good tourism and bad tourism. And I am for, in a sense, a new convention center if it's going to generate the right kind of benefits for HRM and for Halifax. Unfortunately, we're looking at a situation here where the benefits are not there. And my main reason for talking with you is to try to indicate that there's no business case for the convention center as it is now proposed. I'd like to begin with a very bold statement that there is no business case. If you look at the attached slide, you can see that under the present situation, there's no new capital cost required, obviously. What is proposed is a capital cost of something in the area of $144 million. We don't know exactly what it is, but all of the consulting studies that we've looked at to date would suggest that that figure is an acceptable ballpark figure. Right now, the current World Trade and Convention Center appears to be contributing roughly $2.9 million a year to the provincial tax revenue. This comes from sales tax, HST. It comes from income taxes that all of the people working in the industry pay, and from many other sources. The proposal would generate only $2.7 million a year. I'm not sure why a brand new convention center more than twice the size of the existing one would provide lower economic benefits than the current situation, but what can I say? The interesting thing here is the cost to service the debt. Somebody has to borrow, in this case, $144 million to actually create the center. And at the current borrowing costs that the province is experiencing, and that would go for the feds and the city as well, I suppose, it's in the area of 6%. So if you take $144 million and you multiply it by that percentage, you get a cost of about $9 million a year, every year in the future, to cover the cost of the investment in the new center. Now, you have to look at that in the context of convention centers as a market. In the United States, over the past 15 to 20 years, you can see on that left-hand figure that business has been relatively flat. It's a description of the number of visitors, delegates to conventions and trade shows in the 200 largest conventions and trade shows in the United States. And there are those who would say, oh, well, that doesn't really apply to Halifax. And I grant you that's true. But take a look at the graph on the right. That's for Canada. And it's for the 50 largest conventions that are held in Canada. And you can see that it's not a growing market, to say the least. If anything, it's flat, and perhaps it's even decreasing. When the studies were done for this particular proposal, the company that produced the forecasts is a legitimate tourism consulting study they should know something about the convention market. They're called HLT Advisory from Toronto. You can see two charts in front of you, two graphs. The first one on the left shows what the business level has been like at the WTCC, over the last 5 years. And it averages a little under 10,000 a year. Call it 10,000 a year for jazz. The HLT has estimated that that level is going to increase by more than a factor of 2. So instead of 10,000 delegates coming from outside the province to the World Trade and Convention Center, and the new one, they say it would be about 22,000. So that's a pretty substantial increase, and frankly, that gives me a certain amount of heartburn, but I'm prepared at this stage to, okay, I accept that, what's next? Well, what's next is that the staff of the World Trade and Convention Center thought to themselves, gosh, the economic impact doesn't appear to be enough here. So our consultants haven't generated enough business in the report they gave us, even though they're the professional people, they're the ones who should know. And even though they've told us that business is going to more than double, staff of the World Trade and Convention Center themselves, in-house, prepared another study which indicated that the business level would rise to over 50,000 from a current level of about 10,000, 5 times. And they had the audacity to put this report on their website under the topic Studies, and to imply to the untutored reader that it was every bit as legitimate as the other consulting studies for which you and I have paid goodness knows how many tens or hundreds of thousands of dollars. They just disregarded it and published their own. Unconscionable. Getting back to the market, you may remember that graph on the left here. That's the graph that shows what happened to convention center attendance in Canada over the past 10 years or so. I've shown that on the right as well, but I've superimposed on that what's happened to convention space. There's literally a convention space race underway right now. This represents the top 18 and possibly 20 convention centers in Canada, of which the World Trade and Convention Center is one. And you can see that even though business is falling off, the building race continues. We don't know why. The consultants themselves, there are 4 consulting reports. And the reports, they say there's an oversupply of convention space. They say that in some cases, convention customers are in the driver's seat. The people who are organizing conventions are actually coming to convention centers and they're saying, listen, we don't want to pay any rent. Business is such that you have to give us the rent free, then we'll visit your city. Otherwise, all bets are off, we're going to go somewhere else. In many cases, the market forecasts have not been met when they've had consultants do studies to support the contention that there should be a new convention center. Right included in the reports, they say building larger is no guarantee of success. Just because you build it, it doesn't mean they're going to come. They also point out that there are many, many challenges to getting increased business from the U.S. And yet, we're told that the new convention center would go after that level of business. There were a number of reports, and I'll go over them quickly. The first one was done by Criterion Communications in April of last year. But right on the front page, the report says, you shouldn't rely on this report for any financial assessment because it's based just on the observations of the single person who wrote it. And incidentally, that single person wasn't really a consultant. He was the executive director of the industry support group for all of the convention centers in Canada. So that's, hardly an independent report. The second one was done by HLT Advisory. I referred to them earlier. They're a pretty legitimate firm out of Toronto. They're the ones who projected that business would increase by more than twice the levels. But their report is the one that has many, many caveats about, building it bigger is no guarantee of success. The third report was done by Deloitte, and most people have heard of the name Deloitte, large economic or consulting company, mostly CAs, but nevertheless they do a lot of other stuff. But the report's incomplete. They called it a feasibility analysis of a convention center, and there's no mention in the report of any feasibility analysis. There's none. I can't imagine why they call it a feasibility study, a financial study, and then there's no finances in the report. So I totally discount that one. Gardner Pinfold is the fourth report. Gardner Pinfold are consulting economists, and they're very good at what they do. And their job is to determine what the economic impact of a proposed convention center would produce. And that goes back to the $2.7 million that I mentioned in the beginning. They say that this proposed new center would generate $2.7 million worth of increased provincial taxes. That's sales tax, income tax, and what have you. Even though the current one appears to be generating $2.9 million. That's beyond me. They also ignore what the current center is doing, which is not really good practice. You can't say all of the benefits to the new center or from the new center, because the existing center is already providing benefits, and they're not accounting for that. The fifth report, and I use the term report advisedly, is the one that TCL did themselves, where they said that business is going to be 5 times the current level. You can totally throw that one out, but nevertheless, they put it in their list as a report, so I'll call it a report. And then the sixth one is another report by Gardner Pinfold that the staff of the Trade Center commissioned to be done at a cost of $10,000 of your money and mine to calculate the economic impact if the business level was 5 times what the current level is. Even still, incidentally, it didn't come anywhere near to paying for the cost of capital. So, in summary, we have a situation here where the reports themselves point to problems with markets. We have a situation where they've forecast more than double current levels in the face of the generally declining or flat market in North America. We have the World Trade and Convention Center staff presenting a report that says it'll be 5 times current levels, which is totally unconscionable. We have a real disconnect between what's happening in the market and what's happening to space. There's a space race, and it just doesn't make any sense at all. We're being told, oh, well, everybody else is building bigger and newer centers, so you better do it, because then you're going to lose money. Well, yeah, maybe, but maybe we don't want it if it's not going to provide any benefits. The reports include many caveats, like building larger is no guarantee of success. I mean, they say it in those exact words in the report, and yet nobody seems to want to understand it. And the reports ignore the current provincial taxes revenues from the World Trade and Convention Center that's operating now. So at the end, I come back to where I started from. There's no business case. We have a situation where we don't have to spend any money. We'll continue to get $2.9 million a year, apparently, of provincial sales tax revenues. And there's no cost to service a large debt. Or we can spend $144 million, get $2.7 million a year in increased taxes, yet have to pay for $9 million a year of increased costs. It just doesn't make sense. There's no business case. Thank you.